In this video, we're going to discuss the income statement account called non-controlling interest. Now, quick note, this is not the same thing as the non-controlling interest that you see on the balance sheet. This is an income statement account. Okay, so non-controlling interest, you'll see that on the income statement when you have a situation where your firm has acquired more than 50% of another company, but less than 100% of that company. Okay, so let's say, for example, you acquire 90% of another firm. There are still shareholders out there that own the other 10% of that firm. And those are the non-controlling shareholders or minority shareholders. And so this non-controlling interest account that's going to show up on the income statement, it's representing the shareholders' claims, those minority shareholders' claims against the net income of that company that your firm has acquired. Let me show you an example and it'll make it a little bit easier for you to understand. So let's say that your company acquires 75% of Cat World. Okay, so you've bought Cat World, you have 75% of them. What we're going to do is we're going to create a consolidated income statement, right? So we're going to create a consolidated income statement for the entire entity, for your company and Cat World, as if they were one company, okay? So we're going to take the net income of your company, and let's say that was $400,000, and the net income of Cat World, and let's say that that was $100,000. We're going to add them together, and that's going to give us a consolidated net income of $500,000. But we have to recognize the fact that, hey, of this $100,000, even though it's all part of our consolidated net income and we consolidate 100% of it, there are minority shareholders who own the other 25% of the equity of Cat World, right? Because we got 75%, so there are people who own the other 25%. And so we could say, hey, look, if we multiply this by 25%, it gives us 25,000. And so we could say that that represents the claims of those shareholders who own that other 25%. We could say theoretically they have a claim against 25,000 of Cat World's $100,000 in net income. So what we're going to do to reflect that is below the consolidated net income account, we're going to create another account, and it's going to say income attributable to non-controlling shareholders, or it might just say non-controlling interest. Okay, so this is the non-controlling interest on the income statement. It's $25,000. Okay, so this is the income that is attributable to those non-controlling shareholders. It's $25,000 as we calculated here. But now we're going to have an additional line. And this is going to be the true bottom line, is we're going to have the income attributable to the parent company. That's your company here. You were the one that acquired Cat World, and so you're consolidating Cat World, so you are the parent company. So it's going to say income attributable to parent company shareholders. Okay, so that is just if we take the $500,000 of net income for the consolidated entire entity as a whole, that's both these together, and then we take out that non-controlling interest, we subtract that $25,000, it gives us the $475,000, which is the net income that is strictly attributable to the parent company shareholders, which in this case is your company.